For joining us with your thoughts on the market and some specific trading ideas. Time we should focus and get you a more fundamental view in the market on Street View at lunch. We're joined live by Gautam Trivedi, Managing Director and Head of Equities India at Religare. Afternoon, Gautam. Thank you so much for joining us live on Markets at Lunch. First up, what do you make of the mood of the market? Given the correction that we saw over the last 3-4 trading sessions, today's move doesn't really come as a surprise, but how do you analyze the mood in the market?
I think at this point, and I can speak, about our conference that we had in London last week. I was there in London along with 18 companies that we took down to London to meet UK investors. And the mood clearly last week, and I don't think it's significantly different right now, is that 90 to 95% of the investors have actually missed out on the rally. And given the way the market's done over the past 7 to 8 weeks, investors are not looking at chasing the rally at this point. There are a bunch of events coming up, especially in the month of March. You've got, of course, the UP elections on the 6th. You've got the RBI policy on the 15th, and then the 16th, of course, is the most awaited annual budget. So I think given these factors, there's a lot of uncertainty about how all these three events are going to play out. And hence, a lot of investors that we've met are clearly not in the mood to chase the market at this point.
Gautam, just hang in there. Let's listen to what the finance minister is speaking on the rising crude oil prices, because that's an overhang for the market clearly.
Possible impact on the monetary policy and the fiscal situation. So the crude is boiling right now.
Of course, price rising. It is a disturbing factor, no doubt. But it would be too premature to say that what would be its adverse impact in which sector. There will be adverse impact, no doubt.
Gautam, do you believe that the market has, in a sense, completely discounted the potential impact of rising crude oil prices? Because the rally that we've seen over the last 1.5 months was completely oblivious of what was happening as far as crude oil prices are concerned and the broader geopolitical tension.
I think the focus has come back to crude oil prices. I don't think the market is oblivious or ignoring the rise in crude oil prices. I think that is increasingly becoming a cause of concern. Yesterday, as well as most of today, the conversations that we've had with investors, that seems to be the prime concern. So I don't think that's going away. Investors want clearly to understand how India is going to tackle the rising oil subsidy bill. Number one. Number two, some of the investors we spoke to last week as well as this week have clearly said at this point, some of them, again, I don't mean all of them, some of them are clearly saying China does start to look more attractive when you factor in the oil shock for India.
So Gautam, given the current valuations as a house, what is it that you really like and would recommend buying to your clients at the current levels?
We still like Hero MotoCorp. We like Tata Motors, clearly not a India play. So we like these two in particular. We also among the financials like State Bank of India, Yes Bank, Axis Bank. These are names that we like. And what we don't like, if I can preempt that question, is IT and telecoms. Telecoms being fully valued, I think, at this point, and IT in particular valuations are not supportive of these stocks at this point.
Would you buy any of the power developers on dips if you were to believe in the fundamentals and the fact that things seem to be changing now for the sector by way of policy reform?
Not yet. I think we need to see more evidence. A lot has been announced, but we need to see a follow-through by the government in terms of the initiatives. I think it's a little early to actually buy any of them at this point.
What would be your preferred pick in the rate sensitives? Would you go in favor of consumer discretionary, or would you still prefer the auto pack?
I think on the rate sensitivities, the auto, I think there's a bit of a misnomer out there for the passenger car segment. We did a road trip about 2 weeks ago where we went and met did a whole bunch of channel checks in Andhra Pradesh and Uttar Pradesh. What we found is a lot of the auto dealers that we met said that in the A and B segment, and that's where Maruti is present, there is very limited sensitivity to higher interest rates. So clearly not impacting the A and B and the small car segment effectively. So I think the better way to play it still would be through real estate. Our top pick remains DLF. Among the autos, I think fuel pricing is a bigger issue, and the fact that if the government were to come out and increase the excise on diesel cars, which is a clear possibility given the arbitrage right now between petrol and diesel, I think that sector will actually take a hit versus the other way around. So I think we prefer to play it through real estate, prefer to play it through banks, of course.
Gautam, what do you think is the street pricing in by way of RBI action? Are we going to see another round of CRR cut, or do you think this time the central bank is going to move and cut force the reverse as well as the repo rates?
We as a house did not expect the RBI to do anything dramatic actually on March 15th. So I don't think we will see that happening. There might be a potential cut in CRR given the tight liquidity. I think the market seems to be pricing that in. I don't think the market at this point is pricing in fully yet a 25 bips cut in the repo rate. I don't think that's likely to happen given how structural inflation is.
So Gautam, clearly then the next big trigger for the market will be the UP election outcome and of course the big budget. What is it that you're expecting from the finance minister this time around? Do you expect some forward movement as far as key reforms are concerned, and would you like to hear him speak more on fiscal consolidation?
I think fiscal consolidation is clearly the key. I think the government and the finance minister in particular, I think, needs to understand that the market is very confused and needs to see fiscal responsibility come in from this government. The problem, though, is you have 15 state elections over the next 24 months and the general election. So the ability of the government at this point to be fiscally responsible, i.e. cut down expenditure, seems to be pretty limited, frankly. So I think, and also with the rising oil price, which is going to continue to balloon our oil subsidy bill, I just don't see how the government is going to do that. The other problem to keep in mind is the fact that the government is now, or should I say the market is increasingly looking at the government for capex, because the private sector capex has dramatically fallen. It's down to 35% of overall capex from as high as 45% back in 2008. So in the absence of that, I think the government will have to pick up the burden of additional capex, and that's not coming. So in a perverse sort of way, if I can add this, in a way, it's good that the private sector capex is not happening right now, and if that too were actually robust at this point, I think that would lead to even significant higher interest rates.
Gautam Trivedi, thank you so much for taking the time out and joining us with your thoughts on the market. Look forward to having you more often on ET Now. Time for a short break here on market.